Well, for our world, it's the fact that the Saudis are looking to the long term to develop their enormous resource to continue to be a reliable supplier to the market, because there's going to be rising demand for at least the next decade for oil products, possibly longer. And this is, if you like, cementing their role as the cornerstone player in global markets, the most reliable and biggest supplier in markets.
Yeah, and look, we were talking, funny enough, we were talking off camera about the early 70s earlier on as well, and you know, and the Saudis and I know OPEC gets very upset when they say, well, we're not reliable suppliers to the market. That was a long time ago, what happened in the early 70s. But I've noticed your language there. You said oil demand will go up for at least the next decade, possibly longer. That is a much less confident assertion than previously, where 2040 and beyond we would still see oil demand increases. Is the world changing quicker than Saudi can catch up with?
Well, possibly, but there are various scenarios, of course, in terms of long-term oil demand. I mean, if we have a much more business as usual with more limited policy implementation, then the profile of oil demand will be of continued growth. But if the world does implement policies more rigorously than it's showing signs of doing today, then the peak could come at some point in the late 2020s, 2030s. We don't know that. What we do know, though, is that even when oil demand does peak at some point in the future, it isn't going to drop off a cliff, because substitutability for oil in so many sectors is still elusive. Shipping, aviation, trucking, petrochemicals, there are still huge driving forces. And the final stat here is that what drives all of this is population growth. 7.9 billion people today, 9.2 billion people in just over 15 years' time. That's the key driving force.
Neil, key question. The move to alternative energy, whether it's solar, whether it's hydro, whether it's wind, etc. What you're saying, if I understand correctly, is that that may moderate the growth in demand for oil products, but it's not going to reverse it. So well, is that a fair summary? There's
already signs that oil demand growth is moderating, but yes, we must stress that it's still growth. Yes. And we're showing signs of an impact from EVs, and we're showing signs of an impact, of course, in the power generation sector, where oil has already lost a big part of its share. But another fantastic stat that my colleagues at the IEA released a couple of weeks ago reflects, if you like, first world problems and consumer choices, and it's this. Year 2000, 35 million SUVs on the road. Today, 200 million SUVs on the road. Yeah. And that reflects continued consumer choice. It reflects the fact that the cost of motoring, the full cost of motoring, has actually been falling in real terms over the years. So there's still a long way to go. And people in developing countries, who generally aren't the people who've been buying these SUVs, as they get richer, move along the development curve, they will be looking to emulate that lifestyle.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.